We used two of the most advanced AI models to create two characters. We will put them face to face. Their arguments will be evaluated by 5 independent AI models across multiple criteria, scored from 0 to 100. This is AI Debates. Are companies exaggerating AI capabilities to attract investors?
Absolutely. Many companies are overselling what their AI can actually do to lure investors and boost valuations. They highlight impressive demos, cherry-pick successes, and downplay limitations like errors, hallucinations, or high operational costs. The reality is far less glamorous, but the narrative drives funding and stock prices. This kind of hype inflates expectations beyond what the technology can deliver, creating a dangerous gap between perception and reality. It's classic bubble behavior, selling a dream rather than a proven, sustainable business. No, companies aren't exaggerating AI capabilities to attract investors while fringe startups hype vaporware. Leaders deliver measurable ROI, driving $190.7 billion VC in 2025 on real traction. McKinsey's 2025 survey, 80% of high performers achieve growth innovation via AI agents, with 33% scaling enterprise-wide. OpenAI's $13 billion rev validates bets, projecting $100 billion by 2027. NVIDIA's 53% margins on $120 billion plus sales crush skeptics. Investors demand due diligence, favoring transparent firms at $144 billion market by year and prove substance over spin. This is maturation, not mirage.
Are corporate leaders making AI promises they can't deliver on time?
Absolutely. Many corporate leaders are promising transformative AI results on aggressive timelines they simply can't meet. They commit to automation, cost savings, and efficiency gains without fully accounting for technical limits, integration challenges, or workforce adaptation. When reality falls short, it erodes trust, inflates the perception of failure, and can trigger financial and operational consequences. The gap between what's promised and what can be delivered is a key driver of the bubble, and a recipe for disappointment when investors and stakeholders realize timelines were unrealistic from the start. No, corporate leaders aren't making undeliverable AI promises. A 2025 surveys show disciplined execution yielding ROI ahead of timelines, with 82% weekly adoption and 75% positive returns. Wharton, 72% measure ROI, focusing productivity profit. Midsize firms realize gains quickest. McKinsey, high performers scale agents 3x faster, leaders championing via roadmaps. Thomson Reuters, strategy adopters twice as likely for revenue growth, saving 5 hours per week. Pilots to production in 90 days for leaders, 3.7x ROI per dollar invested. This is proof, not puffery. $3.5 trillion value unlocked.
Are non-AI companies rebranding as AI companies to inflate valuations?
Absolutely. We're seeing a lot of companies tack AI onto their branding or product lines just to ride the hype wave. Some have minimal AI integration or none at all, but suddenly, their valuations soar because investors are chasing the trend. This is dangerously misleading. It inflates market expectations without creating real economic value. It's the same pattern we saw during the dot-com era with com labels. When reality catches up, these inflated valuations will crash, dragging down not just the companies themselves, but also investor confidence across the sector. No, non-AI companies aren't rebranding as AI companies to inflate valuations. While some hype AI-powered features for premiums, investors in 2025 demand proven ROI, not buzzwords, curbing fluff. Early 2020s. Slap AI on a deck for 30% uplift. Now, VCs scrutinize. 95% of enterprise AI investments yield zero return if unproven, forcing substance. True AI firms like OpenAI $300 billion val on $13 billion rev and NVIDIA $5 trillion on 53% margins drive the boom, with $190 billion VC chasing defensibility. This weeds weaklings, sustaining $3.5 trillion growth.
Are VC firms fueling hype cycles for quick exits?
Absolutely. Venture capital firms are often more focused on quick exits than sustainable growth. They pump huge sums into AI startups, hype milestones, and push aggressive timelines to boost valuations for a future IPO or acquisition. This creates a self-reinforcing cycle. Startups chase flashy results over fundamentals, investors pile in out of FOMO, and the broader market inflates. It's classic hype-driven behavior. Profits are secondary to optics, and when the cycle ends, the fallout hits everyone. from founders to institutional investors. The bubble isn't accidental, it's being actively fueled by short-term incentives. No, VC firms aren't fueling hype cycles for quick exits, they're betting on AI's $3.5 trillion transformation with disciplined diligence, yielding robust 2025 returns. Q3 VC hit $120 billion, fourth straight $100 billion plus quarter, driven by AI's 53% share, not speculation, but mega rounds like CoreWeave's IPO 40% exit value AI-linked. Smart money VCs backed 77% new AI unicorns with exits at $149.9 billion, highest since 2021, emphasizing metrics like compute costs and moats over buzz. Hype pockets exist, but ROI focus e.g. 3x valuations for late-stage AI ensures sustainability, not flips.
Is the media amplifying unrealistic AI expectations?
Absolutely. The media is fueling the hype machine, often focusing on sensational demos, breakthroughs, and doomsday scenarios while glossing over limitations, costs, and failures. Headlines exaggerate near-term capabilities, giving the public and investors the impression that AI can solve everything instantly. This creates unrealistic expectations, drives FOMO, and inflates valuations, all key ingredients for a bubble. When reality inevitably falls short of the narrative, disappointment and financial shock follow. The media isn't just reporting, it's actively amplifying the hype that's putting the economy at risk. Yes, the media is amplifying unrealistic AI expectations through clickbait hype on agents and AGI, but grounded reporting tempers it, driving measured adoption, not delusion. Gartner's 2025 hype cycle pegs Gen at peak of inflated expectations, with headlines touting autonomous agents as work saviors. Yet IBM notes 88% adoption yields pilots, not transformation. Forbes debunks myths like bias-free AI, while BBC highlights Google's irrationality warnings amid $1.4 trillion deals. This scrutiny fosters realism. 75% of firms report ROI in 12 months, fueling $3.5 trillion growth sans crash.